Hello everybody. In this video, I'll be going ahead and going over higher time frame / lower time frame and lower time frame to higher time frame correlation. Now, if you guys haven't seen the time frame alignment video, I highly suggest you guys watch that video before watching this one. It is very, very important that you guys watch that video. I speak about higher time frame and lower time frame with higher time frame correlation in that video primarily. Right? This is a supplementary video towards that one. And if you haven't seen that video, a lot of what I'm going to mention in this video is going to be obsolete, right? So I really, really suggest you guys watching that video first. This is going to be a short video, nothing too crazy, as I already covered most of the topics in the other one, but we shall begin. Foundational information that will be covered within this video: higher time frame analysis, lower time frame refinement, understanding the implementation of these two together within your trading and within your model. So understand before utilizing higher time frame, right? When understanding higher time frame analysis, you must incorporate cracks and correlation to identify what exactly you are looking at. Structure is one thing, but cracks and correlations in conjunction with them, right, allow you to pinpoint exactly where you could refine. So a lot of the times people just look at, oh, 4 hour higher high and then higher low. Oh, we're bullish. Okay, relax. You need to understand, are we actually bullish, right? A lot of times if you have an impulsive higher high, a very strong impulsive higher high, that's usually a manipulation if the first stage was accumulation, right? So you need to go ahead and look for cracks and correlation, look for, PSPs, POIs, anything that can possibly reference price to that point. Look for that. It's very, very important, okay? So look for not only POIs, to be honest with you, you have to look for pretty much anything that can support the move or a fading of the move. So if it's a bullish move, look for a bearish sequential SMT, right? Seeing if it's a manipulation, if that was just the manipulation to create a bearish distribution, or look for sequential SMT at the lows or crack and correlation at the lows that supports the bullish move in the first place, right? Every major distribution is going to be refined to that. So when it comes to lower time frame is used for refinement. It can be used for entries as well. Referencing the time frame alignment video, you can identify exactly where you can enter, which would increase your RR and allow you to mitigate unnecessary risk. Now, why do I mention increase RR? A lot of you guys, 95% of you guys, do not take trades anything above the 5-minute time frame. A lot of you guys are not entering off the 15-minute. I know that for a fact. Okay, and that's okay. That's normal. That's fine. It's not a big deal. Right? You would like to refine your entry and mitigate risk, right? Unnecessary risk, because it's better to have a 20-point stop loss that's protected than an 80-point stop loss at a high that, let's be honest, is most likely not going to get mitigated. And if it does, your draw on liquidity is wrong, right? So it's mitigating that risk that's not necessarily in the market and optimizing it so you guys can make the most amount of money within your trading, right? If you guys don't do that, you're going to struggle drastically. I'm telling you, you will struggle, okay? So using the lower time frame will refine your higher time frame analysis that's already instilled, but also increase risk to reward and also help you within understanding price delivery, right? So the higher time frame objective, right? Structure and cracking correlations are the two things you're going to be looking at, right? So when looking at a higher time frame, 1 hour, 4 hour, 1 day, you are looking to see if price is making new highs or new lows, and you're referencing each candle looking for a valid distribution or areas of accumulation. Now, a lot of people ask, Halo, why are you looking for accumulation on the 1 hour, the 4 hour, or the daily? Well, the 1 hour and 4 hour and the daily, if there's areas of accumulation, what's going to follow is an area of manipulation. And what's going to follow after that is going to be a fucking distribution that's going to make you some money. So you have to be able to understand structure. Are we accumulating, right? Are we making new highs, right? Are those new highs that we're making, are they supported with sequential SMT at the lows? Okay. By the way, let me specify something. Not every single distribution will need to have sequential SMT. It doesn't. If you have bullish, let's say for example, bullish structure, not every single retracement is going to have sequential SMT. It doesn't need to have sequential SMT on every retracement. Would it be ideal? Yes. Right? And when I say on every retracement, I mean on every retracement to initiate the redistribution, right? Like, we come back down, let me make a new low, a higher low. At that higher low, right? We don't have to create sequential SMT to go ahead and reinitiate a buy program back up higher, right? There's already sequential SMT in the market and still to support that bullish narrative. So we don't have to see it every single time we make a higher low. Okay. Now with cracks and correlation, another key aspect of the higher time frame is looking at each candle to see if there is any crack and correlation between them. Sequential SMT, swing divergences, open close. Following the alignments, there should be a crack and correlation that forms that supports every major distribution. Meaning, every time you see a 500, 800 point day like we had this past week, you should probably be seeing a sequential SMT form in some aspect of the market, whether it be at the highs, on the weekly cycle, on the 90-minute, whatever it may be. There should be some type or some form of sequential SMT supporting that narrative to go ahead and see distributions, right? All the major distributions should be supported by some type of crack and correlation or sequential SMT. Every single one of them. Now, your lower time frame objective, refinement and entries, okay? So when first referencing the lower time frame, you will be looking to refine your current outlook / analysis that is already instilled from the higher time frame. It is not to be used as a base in your analysis, simply supplementary to what you already have acquired from your higher time frame. You shouldn't be looking at the 1 minute saying, oh, 1 minute higher high, microcycle sequential SMT, I'm gonna short this shit. No, unless your higher time frame supports that narrative, you are not looking at the 1 minute and saying, okay, I'm gonna do this just because I want to. That's incorrect. You're going to get raped. Do not do that, okay? The lower time frame is there to refine and be a supplementary tool to go ahead and already support the higher time frame analysis. So do not go ahead and go to the lower time frame thinking that you're going to be top taking or bottom taking every single trade. Now, when it comes to entries, 99% of your executions will come down to the 1 minute or 5 minute. The process to get there should be as structured as your analysis / model. I'm going to repeat that one more time for the people who didn't hear it the first time. 99% of your executions will come down to the 1 minute or 5 minute. You guys are not executing on the 15 minute. I know it. The process to get there to the 1 minute or the 5 minute should be as structured as your analysis / model. Do not bounce from the 1 hour to the 1 minute. Look for your POIs, follow the rules of alignments, and structurally support your refinement / entry to the 1 minute / 5 minute time frame. Do not, I repeat, do not go from the 1 hour to the 1 minute only because you believe it's going to be right. No, you need to follow it properly. It needs to make sense. And if it doesn't make sense, then you are wrong. You are wrong within bouncing from the 1 hour to the 1. Or your analysis is wrong. That's why it makes no sense. So make it make sense. If it doesn't make sense, don't take the trade. Follow the rules, okay? I'm going to end it off with this. Everything within the charts should be structured. Your model, your risk, and even the way you bounce from higher time frame to lower time frame or lower time frame to higher time frame. And I put the lower time frame to higher time frame because if you watch the time frame alignment video, you know what I'm talking about, right? Everything is structured and done properly. To succeed in a limitless market, you will first need to set boundaries and restraints. What do I mean by that? A lot of you guys went into trading saying, oh my God, I'm become a multi-millionaire. I can work whatever I want. I can trade whenever I want, however much I want, whatever I want. It's funny how the one job in the world that has zero limits and zero restraints has the most amount of people who are unsuccessful. The reason that is because you are entering a limitless market with limitless opportunity, and that limitless opportunity causes you to have a insane amount of bad actions, not being disciplined. You think that every trade is going to be a proper trade when it's not, right? You have to set boundaries and restraints and limit yourself in a limitless market or in a limitless aspect of your life. If you don't do so, you're not going to succeed, okay? Only because there's no restraints doesn't mean you shouldn't follow rules. All right, guys? Hope you guys enjoyed the video. I'll go ahead and catch you guys later. Any questions you guys may possibly have, feel free to shoot me a DM or ask me in chat. I'll see you guys later.